We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of CashFlowPro, your daily real estate investing podcast and YouTube channel. I'm here today with brothers Ashton and Christopher Levarek of Valkere Investment Group. Guys, how are we doing today?
Excellent. Thanks for having us, Casey.
Absolutely. Absolutely. We're always glad to bring new people in and new thoughts and new processes and new everything. So why don't you kind of start off, Ashton, and tell us a little bit about yourself, and then Chris, you tell us a little bit about yourself and how you all got started and going in the real estate business.
Yeah, sounds good. So my name is Ashton Levarek. I don't know how far you back want to go, but I got out of high school, joined the Coast Guard, did the rescue swimmer thing for the Coast Guard. The war kicked off, so I went into the military. Never looked into investing. All I wanted to do was, travel the world, jump out of planes, shoot guns, all that stuff. So I come 2018, I was about a year and a half from retiring, and the war's dying down. I start to focus. I got a family now, starting to focus on the future. And, I didn't want to get out of the military and just get another job. And that's when Christopher and I started talking together, and he had his own stimulus for getting into real estate. But for me, I really didn't want to answer to anybody else. I wanted to create that freedom, that time freedom for me and my family, that financial freedom, be able to live anywhere I want, not have to, wear a uniform and shave anymore or cut my hair. It's the little things, right? But, and we just started with, 2 duplexes and grew from there. And so it's been a hell of a ride, and Christopher's been an amazing partner, and we're looking forward to growing even more. So, yeah. And
awesome.
Yeah.
I mean, the time freedom that cash flow provides, I think it's like, I guess it's like a drug almost. I hate to look like it, but it's like a drug, because once you get it, it's like, whoa, wait a minute. What? So yeah, man, that's great. The time freedom, I think, is the reason why so many people do what we do, and especially in the commercial space. So Chris, tell us a little bit about you.
Sure. Yeah, I mean, very somewhat similar story. So after I got out of high school, went to college for a year in America. I was kind of bored, dropped out, went to Europe, lived there for 2 years, and studied in south of France, which was awesome. Got a degree over there, an associate's, if you want to call that, in international trade. Came back and joined the military, followed my brother in. I became a firefighter, EMT, stationed in South Dakota, Ellsworth Air Force Base for about 3 years, and did a 4-year term. Came back to Arizona and got my degree in IT. And then I did a 12-year corporate IT W-2 job where I hopped like 5 different companies, made a lot of money, got bored again, and saw really that the 401k that I was putting 10% aside into really wasn't gonna net me much at the end of my life. And so I decided, in 2018, I was like, listen to all these podcasts, and it seemed all the wealthy were in real estate. All the people who had really a lot of money seemed to be in real estate. So got into that arena, and me and Ashton decided to jump in on 2 duplexes in Durham, North Carolina. So that was remote for me. It was about 3 hours from Ashton. And every deal we've done so far has been partnered with someone in some capacity. And we built this business. Eventually it became a business. It didn't start that way, but the idea was always around financial freedom, passive income, time freedom, vacations when we want to with family. And a lot of that was not achievable through a W-2 career. So that's really what pushed me to get out. And it's been awesome.
That's great, man. Now, I'll have to tell you, I've been to the south of France one time,
And I almost swear that if I could live anywhere else, that's where it would be. Now I'm talking about down on the Mediterranean. I'm talking about down in Monaco. We went to Nice and
Beautiful.
Monaco, and there was a time just generally very, very post the COVID shutdown, where airline tickets and airlines were like, we'll basically pay you to fly somewhere, and not really, but I mean, it was like $1,200 round trip to Nice, France for two of us.
For two,
yes, for two of us, $600 a piece, and so
that's like one person now.
Yes, and we knocked that out, and man, I tell you, that whole area is just
It's gorgeous.
It's unbelievable, really. So anyway, that being said, that's definitely a high on our priority list, is to get back there someday. So all right, so the first kind of subject matter I want to tackle here, I've heard both of you reference the two duplexes that you bought in, was it Raleigh or something like that? Durham. Okay. Durham, North Carolina. And I was thinking Raleigh, Durham, the airport,
it's I mean, they're 20 minutes apart, really.
They've probably really grown enough where they're probably not even like that far. I mean, just
totally
don't ever leave one and go to the other. So so I'd like to hear a little bit more about, like, say the next transaction after that. When did the light bulb really come on that you could use outside capital to grow your business?
Yeah, that, we had I don't know, luck. I hate to say luck because that sounds like some outside force. I think luck is more about preparation and opportunity. And we had been reading all the right books. We had been listening to all the right podcasts. We've been doubling down on studying and learning the whole process. And I think at the beginning there, we just started talking about what we were doing, and Christopher could talk about it a little bit more because he had been talking about it with a guy at work, what he wanted to do. And that's probably one of the keys, right? You got to talk to people. You got to let people know. And apparently, like, and Chris, you should probably talk more on it, but he had some capital and he wanted to do it too, but he didn't know how. And we said we would do the hard stuff if he brought the capital. And that's it. That was our first partner. And that was the light bulb. And then every deal after that, we brought in private investors, people that, didn't know how, but had the capital, didn't have the time or the knowledge, but had the capital and saw opportunity to invest passively in what we were doing, so.
Yeah. And what was the size of the second deal, both dollars and doors?
Well, they were actually just duplexes. The next two deals were duplexes.
Okay.
But it was, we did a 5-unit after that. And that was a commercial one. That was our first technically commercial loan. And that's when we started to see the power of commercial loans. And then right around there, 5-unit, we did a 13-unit shortly after that. And that would have been
all those deals. I think if you calculate all those deals and the capital we invested personally, it was, if what is that, 4, 8, 9, close to 20 units where we only put 90K of our own capital.
You used outside investor funds for the rest, or leverage equity, or what?
Yes. So
we kept recycling.
We were the guarantors on the loan, and we did all the renovations and the property management and all that kind of stuff. So you could say that was our investment.
Sure.
But all the capital for that point, and it's changed now. Now we invest a lot of our own. But in the beginning, we didn't really have as much as we wanted. So in the beginning, we invested 90K really in that first deal. The other ones, we actually didn't really invest anything because we were able to leverage our relationships and our partnerships to provide a service and get something as well as a service in the partnership. So
you basically just monetize that at a later point in time is what it amounts to, right?
Yeah. And it gets easier and easier. The more you do it, the more credible you get, the better you get at it, and the more you're able to help another person who really doesn't want to do that. They simply just want to be in real estate. They don't want to go through all the nuts and bolts and the issues, and as well as
they know they want the passive income, but they don't want the, what do we call that in this business? All the T's: toilets, trash, termites, tenants.
Totally.
Any other T you can think of?
One other thing we're leaving out though is, and this is one of the things that brings a lot of credibility to when you're starting out, is we were able to refinance out of a couple of those deals in the beginning. give all the capital back to that investor, and he came back for other deals naturally, right?
Yep.
Because
plus, did you leave them in their position in the original deal?
Yeah, they got equity, and now they have no capital in because we refinanced out, and they're like, why wouldn't I keep doing this?
Yeah. I ran across the syndication, probably been a month or 6 weeks ago, in Alabama. The syndication I think was based in Florida, but the property was like a 300 or 400 unit in Alabama. I mean, it was a serious deal. It was like a 40 or $50 million acquisition and 10 or $15 million capital raise and so on and so forth. And they marketed theirs as infinite returns. That's
smart.
And I think that really like clicked. And obviously I think there needs to be a pretty sizable disclaimer at the bottom of that. But infinite returns basically means, for them meant we're going to return your capital. We're going to use your capital. We're going to get the property purchased. We're going to let the value increase. Then we're going to refinance it. Then we're going to return your capital. And then after all expenses are paid, you're still going to get X return as we move forward. And then obviously till we sell the property or economic climate changes or whatever. So, so I mean, that's really like you all basically did the whole ladder thing that I always tell people, like don't come into this business and expect that you're going to go close even a 50 unit complex to start, right? You all started with 2 duplexes after the learning curve happened, or what you thought was the learning curve. And I'm sure then there was other learning curves as you grew, but man, I mean, that right there is like the way to go. And because I think a lot of people see the Grant Cardones and they see people on Instagram or some other social media who like in their mind have just started this yesterday because they just found them on social media, and now they're buying 200 unit $100 million complexes, and it just doesn't work like that.
Yeah, you're absolutely right. And one of the things we've learned too, talking about that learning curve and then where to start and beginners, because that's what everybody wants to know. They're like, how do I get into it?
Yep. And it's always the chicken or the egg. Do I find a property or do I raise capital?
Yeah.
That's the conundrum, I guess, when people first get going or first find out that they're interested. They're like, okay, do I find a property and then, or go ahead.
Yeah. Well, what I've seen is there's 3 ways people get into these larger deals, because usually they don't have all the capital or the experience or the time to do it, right? And so if you start getting in that space, you start meeting all these gurus, seeing all the courses and stuff. So that's the first one, right? You hire or buy into a mentorship program, which can be very beneficial. They give you all the tools of the kingdom. You still got to go do the work. You still got to raise the capital, find the deals. You got to meet the partners, put everything together. But they do provide a lot of that, right? The downside, obviously, is you have to pay to get in. You have to pay to play. You have to, a lot of times the deals have to be qualified by that mentor before he'll allow anybody in his group to invest in your deal, which can be good, maybe bad. I don't know. We never did one of those. So there's that. There was do it on your own, like we started. You do start small and you're building up slowly, and you own all the risk, but you all own all the return too, right?
Yep.
So that's a great way, but it's a lot slower too. And then the last way, and we've seen a couple guys just take off with this, and we'll get into this later, but I think it was our 5th deal was where we really catapulted or slingshotted into bigger deals. And it was because of this, was partnering with other people, focusing on what we were good at. And sometimes it takes a couple deals to realize what you're good at. But focus on what you're good at, and then partnering with somebody else that brings, complements your weaknesses. And so maybe you have the capital, they have the knowledge on how to find contractors, or maybe you come in as an LP, which we've seen a lot of that too. We have a friend, he came in as an LP and on 2 other deals, not our deals, 2 other deals. And then he partnered with us on a syndication. We knocked it out of the park, Sure. And now he's doing his own self-storage units all by himself. And it's awesome. So I think partnerships can be a really great way to do it too. But you do have to form those relationships.
Yeah. The joint venture stuff, I think a lot of people forget. And I'll be honest, for even myself included in this example, is the same thing that I think a lot of people run into when they're marketing or when they're doing any type of business, is the mindset that nobody can do it as good as I can. Nobody can do it as good as I can. And I battle that on a daily basis, Some people call it control. Some people call it whatever you will. The bottom line is I'm just like, okay, so how do I teach somebody how to do this? Why, hell no, I can do it faster than I can teach it. Well, that's not the scalable activity. That's not the activity of actually putting that on somebody else's plate and stopping and taking the time to put these pieces together, right?
Yeah.
Yeah.
We're very similar. I mean, we didn't take a mentorship at all or coaching for 4 years, which is similar to a degree, because the faster scalable method is to partner with a mentor who's done it already. And yes, you pay a fee typically, but it 10x's your growth. There's nothing wrong about that. We chose primarily because we both have big egos and think we can do it all ourselves.
No, man, it's not that. I don't think it's ego at all. I mean, I think it's confidence in yourself, which I guess, yeah, that's ego, whatever. So you prove me wrong. But I just, man, I really think that it comes down to efficiency. And I sleep best at night when I know everything is done. And if somebody else is in charge of doing something, I don't like, I've got to have that I know that's been done. And I battle it every single day. And like you said, you all do too. So I know I'm not alone in this. But anyhow, so yeah. So once you decided that, hey, it is okay to maybe give up a little bit of this. And just for instance, like today, I found myself going through and improving transactions in QuickBooks, right? I'm like, is this the best use of my time? Absolutely not. Absolutely not. So it's the first time I've done it in a while, but I think, okay, how can I make this faster, better, easier, more efficient, so on. So anyway, all right. So you said the fifth deal was really what catapulted you all into multi-family stuff where you really started to grow and scale, right?
Yeah, I think that was we did a 13 unit. It wasn't a syndication, but that was the one where we kind of had a heart to heart with everybody on the team, which it was just me and my wife, and then my brother and his wife. Our wives had retired from their jobs, from doing, for the real estate business. And Christopher's wife actually came, to a meeting. She's like, why are we looking at these? We were looking at a couple other duplexes or something. I don't know. And we had just, yeah, they're easy. Right. But it was the same amount of work as the 13 unit we just did. And we're like,
yeah, actually, they weren't easy. They were comfortable. That's it.
Yeah. That's a better way to put it.
I'd say
and that's
fair,
what it was.
Fair enough. Yeah.
Yeah. And essentially we started looking at, syndicate. How can we go bigger? And we got a 16 unit thrown at us, and we got a couple others, and we were making offers on some bigger deals, I think. And the underwriting, because we had been networking, we found a great broker, and he was confirming and telling us, no, I wouldn't invest in that one. I wouldn't buy that one. Banker. We're not going to, yeah, the banker. So, but the 16 unit penciled out, and yeah. And then
isn't that funny? You make that mention about the broker, and myself coming from the real estate sales space, which I know my audience gets tired of hearing me talk about, but it's so relatable to the business. But, I had a guy one time who I showed a package of rental properties to, and about 6 weeks later, I heard, we're in a small town, we hear everything. I heard that he had bought them, right? And right before that, I was not involved in the transaction, but I had found them. I took him and showed them to him, and he bought them. Okay, and find out he bought them through the broker that had it listed, right? But right before that, I had just found him a deal that he bought for about 60 cents on the dollar of what it was really worth. And I called him up and I said, listen, you can have that deal. That's fine. You can have the deal you just bought. That's even fine. But I can guarantee you one thing. You will never get another deal from me or my brokerage again. And that is a fact. And he was just like, it was like all of a sudden it occurred to him that, man, he might have won this little battle, but you know, I'm a deal finder. We get out and we find deals. We call banks. We have all these people on our lists. And I can guarantee you one thing, he's not going to ever get offered an opportunity to buy. So it's amazing to me how many people write the broker relationship off as, oh, that guy's just a salesman, or that girl's just trying to help me do this. But in fact, the fact that we have clients or as brokers have clients that trust them implicitly, it's a channel of trust. And so, you know, when you mentioned the fact that you had a broker relationship and the broker ultimately ended up becoming not necessarily maybe a full-time mentor, but he was definitely mentoring you on what to look for, how to look for it, where to find it, educating you, giving you value. And then, you know, so the relationships go all kinds of different ways, but it's just amazing to me how many people just like forget the broker because he's just a middleman.
Wow. Yeah. I mean, it's a people, everything's a people business, right? The better your relationships, the better deals you're going to get. And you know, if all you're doing is looking at numbers and disregarding people, like you're going to burn a lot of bridges, and you'll miss out on a lot of stuff. So
we talk about it a lot too. I mean, we do a lot of educational. I write a blog a week. We just did a course on it, but real estate is a team sport. And the thing is if you burn one of your team members, guess what? You got to fill that position again. And it is not fun to hire. It's not fun to build a new relationship always, you know, entirely, because sometimes you don't know that person. It's going to take you months to understand
and it comes back to what I just said about, hey, is it easier to do it yourself or easier to train somebody? Well, by the time you train somebody, but if you train them and then you piss them off and they leave, now you got to start over.
Totally. And it's the same with, you know, partnering with other experts. If you burn a good relationship with another expert, now you got to go vet another expert or find another connection. I mean, it's tedious.
Yep.
So even like when we did our first syndication, we gave a boots on the ground guy 10% of the deal. And we were new at the time to this, and we weren't living in North Carolina, but it turned out to be one of the best investments, and that deal did amazing because we had a guy local. He also played a lot of the numbers game. He was a very analytical guy, so he did a lot of the asset management spreadsheet stuff. And you know, at times back later, like, man, we gave up 10% of that deal.
Yeah, but
but it didn't matter because the relationship went a lot further, and it all
we
came
made 50% returns on that one. 50% per year.
52% return.
52.
2 years.
Yeah. Hey, and I tell you, one of the first lessons I learned, we were in the cattle business, and this guy, the guy that was the head of the company, come in, and I was quandering over whether I should exit a position or not when we were trading in the commodities market. And he said, "Are you making a profit?" I said, "Yes, sir." He said, "Why? He said, "I've never heard of anybody that's went broke by making a profit, by taking a profit rather." True. It's the same deal. Yeah. I mean, you have to decide when enough is enough on a deal, and it's you know, that can be as much a burden as anything on trying to figure out what's best for you and your company. So, no, man, that's some good stuff, guys. I mean, I love that y'all basically started as, you know, nothing. I mean, you really, you know, you had a little bit of money to invest or had a little retirement, whatever it was when you got out of the military, but to multiply it into what you all have now. Now, where are we at today? What do we have under management today?
We've sold a couple properties in the last, I don't know, 4 or 5 months, but bought.
I think everybody has.
Yeah. You'd be silly not to.
Yeah. So we hit 100,000 or 100 million under management at one point, but we've sold off 4 properties at this point. So I think we're at around 70.
Sure.
So yeah, I'd have to sit down and look at it again. But
that's pretty whoop ass, man. I mean, that's coming. What year was it? I mean, maybe you said that, but what year was it when you all got out of the military and kind of joined forces?
Well, we started in 2008, but I was in the military still when I was in 2018.
That would have been a
So
good time to start, but
yeah, yeah.
Sure. Well, I mean,
Definitely.
you know, here we
2012,
are,
yeah.
mid-September-ish recording our podcast. By the time this airs, it'll be mid-October-ish or even closer, maybe close to November. But I mean, that's 4 years, guys. That's pretty damn healthy, no matter how you look at it.
It's been cool, and a lot of it is team sport partnerships. That's really what's done it for us. The 16 unit led to another partnership. That partnership led to another partnership, and it just kept,
Well,
spinning.
let me ask another question, and this is for those, because I don't get a lot of opportunity where we have, especially brothers, but even two partners on one podcast at this one time. So, and please tell me, I'm curious about structure of pay, structure of how did you all, because this is real world stuff. How did, like, what is your all's structure as far as, like, I know you have capital stacks and whatever on different deals, but what is the structure among brothers that says, hey, do we just get like a big check for $10 million? You take 5, I take 5. Do you have like where we draw salary every month and then this is a bonus we reinvest, or retained earnings, or what does that look like?
Yeah, that's a good question. I would start, and at any time you're doing a partnership, and I am not the guy that said this at the beginning, but Christopher did, and I'm glad he did. He was like, we need to get it all on paper to avoid any type of assumptions. You're not making assumptions, and then when somebody doesn't meet your assumption, you get upset, and then you want to break up the partnership or whatever, right? Like you're holding all these grudges, and so and that was very smart, and we did that, and we have, it's all in writing. We each have our own personal LLC that each of us have. We own 100% of, and then that LLC owns 50% of our holding company, so yeah, we have 50-50 on the company. And then of course that owns all the syndications, all the properties we've done. But we have structured it. We followed the the profit first model, and we've started implementing that. And so that, if people are looking for a way to do this, I think that's a great place to start. Whether it's 2 properties, 1 property, whatever, like that's a great way to structure your returns so that you're getting paid. Because I think a lot of people, and we did it too, make that mistake in the beginning, like just roll it back into the company, and then you're actually not making any money, and then you're scrambling, and then you don't have capex, and then so you do need a structure. You absolutely need a structure. And that book was pivotal in that. And yes, so we have W-2s, and we just put my wife on a W-2 as well.
The structure, like you said, you got that holding company which has ownership shares in multiple LLCs. There's 25 plus now that hold different properties, and then we built a S corp on the side. So the holding company pays out fee structure. So you could call it acquisition fee, you could call it management fee, whatever. It's the holding company paying the S corp. The S corp then has 2 or 3 salaried employees. The rest are 1099 contractors. We have about, other than the 4 of us, there's 5 other people working in the company, 3 in the Philippines, and so they're all 1099. And but two are on salary, if you would put it. Well, I'm one of them, and the reason is too to have pay stubs and some other reasons, write off the expenses of the S corp. But we didn't do that in the beginning. In the beginning, we messed up a lot. We didn't pay ourselves. That's why that profit first is great. Income comes into an income account, and we take a percentage for profit for the owners of the company. That's an expense. You're paying yourself. So pay yourself first. On top of that, we have the salary. So the profits are really more like bonuses to us for actually sticking in for 4 years. Running this thing.
Yeah, it makes sense. Awesome. All right, well, listen, so we have a couple of questions I'm going to ask Ashton. I'd like for you to answer first, then Chris, you can answer second. The first of those questions is, what is the best book that you've recently read or are currently reading?
Hi, this is Casey Brown, host of the CashFlowPro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making CashFlowPro part of your day. Now, back to the show.
Okay, so I'm really into Ray Dalio right now.
Ray
I know
Dalio,
Christopher-
badass.
Yeah. So I know Christopher thought I was going to say Alex Hormozy because that was I just finished that.
Hormozy's a badass.
Yeah, I read his book like 5 times in a row,
Either
back to
one
back
of
to
them.
back. But then I just got into Ray Dalio after listening to him talk with Tony Robbins. And if you're interested in his book and you really want to get a good idea, his latest one, it's like Principles of a Changing Empire, a Rise and Fall of an Empire. It's brilliant. It's a lot about investing and currencies and how power becomes, or how an empire becomes a power, how a country becomes a world power, and how they also fall, and then where to place your money, how to invest. And it's a really good history lesson, if you will. But there's a YouTube video that kind of outlines the book, and essentially it's an advertisement for the book, but it's really good. It has a lot of cartoons and stuff, so it helps.
Sure.
But
Yeah, pictures, right?
Yeah.
All right, Chris, what about you?
So I'm reading 2 right now. I hop between Traffic Secrets by Russell Brunson.
Oh man,
It's a great one. It'll take you a little bit to get through because there's so much meat in there. But I read his first one and it was a lot. This one's a little more focused on getting traffic, on getting direction into your funnel, whether that be a website or whatever. But really great if you like marketing. And then The Road Less Stupid is an amazing book for any business owner. And it's media as well. Every chapter will cause you to ask questions about how your business is doing and how you can run it more efficiently. Really great book. So those 2 are awesome.
Awesome. All right, now next question: what is a dream vacation that you have taken or hope to take?
Yeah, that's a fun one because these are in our company goals. We've had Bali on there for a while. So we want to do a whole family trip to Bali, and make it worth it, not just like a 5-day thing, because it'll probably take a day and a half just to get out there, make
Yes,
like
it
a
will.
three a week thing. So I love surfing. I want to teach my daughters to surf. And so I've always wanted to go to Bali, and that's kind of a dream vacation for us. We made it out to Hawaii last year, but yeah, Bali's still on the list.
Yeah. All right, Chris, what about you?
That's it. That's on our goal sheet. So I agree with Bali.
Awesome, man. All right. So listen, if the listeners heard something that resonated with them, or they want to reach out and get in touch with you all and learn more about Valkere Investment Group, what's the best way for them to do that?
Yeah, just go to the website, valkeregroup.com, VALKERE group.com. We have a ton of resources on there, and you can reach out if you want to connect, and
Sure.
happy to chat.
Awesome, man. We'll get that put in the show notes. And listeners, as always, I want to thank you all for taking the time to listen to us chat today about how they have grown Valkere Investment Group from the ground up. Guys, thank you so much for your time and all of the insight that you've given us today into how to make, how to build a life based on cash flow and what kind of freedoms that it gives you, and the structures that take care of all that. So again, thank everybody, and listeners, as always, please head down and smash that subscribe button. And while you're there, please leave us a 5-star review so that others can know leave a 5-star review and write a review so that others may know what we talk about here on the CashFlowPro podcast. And guys, thank you all again, and best of luck with Valkere, and let us know if we can do anything else. And I want to thank everybody for their time.
Thanks so much, Casey.
CashFlowPro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.